Big headlines in cryptocurrency this week. The US Securities and Exchange Commission has sued Binance and its CEO, CZ, for US security violations. In an article on the SEC website, the SEC filed 13 charges against Binance entities and its founder, CZ. At the same time, the SEC also charges Coinbase, which is another big cryptocurrency exchange, for operating as an unregistered security exchange, broker, and clearing agency. The main big difference between Binance and Coinbase is that Binance does not actually operate within the US. Instead, it's got a subsidiary called Binance US, which allows its US-based customers to access the service. Coinbase, on the other hand, is a cryptocurrency exchange that is listed on the US stock exchange. So Binance and Coinbase are pretty much the biggest and the second largest cryptocurrency exchange in the world. In its filings, SEC suggested that Binance has been using its sister companies to make fake trades between each other to artificially inflate the amount of transactions that actually occur within the Binance system. Now, basically, what these companies do is they make fake trades against themselves, and this artificially boosts up the numbers of transactions within the Binance system so that it appears that lots of transactions have occurred. But most importantly, the SEC has claimed that Binance has been using customer funds for buying luxury items such as million-dollar yachts. Now, this is a very clear reminder of what happened with the FTX situation, where basically they have been using customer funds for making risky crypto asset trades, and they have lost a ton of the customers' money, which eventually led to the closure of FTX, and tons of people have lost millions of dollars of money. In a tweet released by the SEC, they're basically trolling Binance using one of the quotes from their compliance officers that they are operating as an unlicensed security exchange in the USA. So after all of this news has broke, investors have pulled out $790 million from crypto exchanges Binance after the release of these charges. But of course, Binance has disputed these allegations and said that that was not the case. Binance's own cryptocurrency token BNB has dropped from around $300 in price to around $260 within 2 days of the news. So people are just pulling out their money massively from the Binance exchange. On the other hand, SEC does not have as many charges for Coinbase, but it did charge them as operating as an unregistered securities exchange, broker, and clearing agency. The Coinbase stock itself has dropped in price from around $63 down to about $53. So that is almost around a 10-15% decrease in its share price. This happened only 2 years after Coinbase actually had their IPO on the Nasdaq exchange back in 2021. And Coinbase had their value at around $328 per share. From that point onwards, it's just a steep and a dramatic sell-off of the Coinbase share price. Now, what I find particularly interesting is that Cathie Wood, famous for the ARK investment group funds, they actually have been buying up Coinbase stock following this SEC lawsuit. So it says here that they have actually bought more than $400,000 worth of the crypto exchange Coinbase shares that's worth more than $20 million as of yesterday, which is very interesting because most of the other investors are trying to get out of Coinbase, whereas Cathie Wood and ARK Invest have been buying into the cryptocurrency exchange. Now, do they know something that we don't know? It can never tell. But here's the thing, ARK Invest itself hasn't had a particularly good track record as of recent. Their flagship ARK Innovation ETF has a pretty steep drop-off from $120 per share around the end of 2022 to around $40 in June of 2023. Just as a full disclaimer, I do have a small cryptocurrency portfolio with Binance, so any of the current news that's happening does affect me personally as well. And this is only for my personal situation, and it should not be taken as any sort of advice for your situation. With that being said, the most important thing to do now is probably risk management. So this is a time where you really have to seriously look at the amount that you are investing, what you are actually investing in. Do you actually know what sort of cryptocurrency that you are investing? And it's very important that you do not invest more than you can actually realistically afford to lose. This could easily mean taking out most of the cryptocurrency from your exchange, or storing it into a cold wallet, or just selling it off completely. If it was up to my personal opinion, I do not think that the SEC lawsuit against the cryptocurrency exchanges would actually bring the cryptocurrency exchanges down. Because while SEC can file these lawsuits, they cannot actually present criminal charges to these particular cryptocurrency exchanges. So the cryptocurrency exchanges are still basically operating in this very murky gray area. And there has been no proof of showing that these cryptocurrency are actually unable to pay back the customer funds. The broad crypto market has experienced a slight bounce back after the release of the news. So for when the SEC filing first came through, all of the major cryptocurrencies had a pretty major tumble. But after that, the price actually bounced back pretty significantly, showing that most of the people do not actually see these SEC filing as something that will completely tank the cryptocurrency. So for example, Bitcoin experienced a bit of a dip over the past 2 days. If we look at Ethereum, it follows kind of a similar trend. It's experienced a dip when the news was first released, and then it had a bounce back. So a lot of people are basically expecting the SEC to not have a long-term impact on these crypto exchanges just yet. But does that mean that suddenly these crypto exchanges are the safest thing? Absolutely not. Again, manage your risk and be sure to protect your assets.